This TV show is made available to provide general information and a general overview of legal principles. Viewers should not rely on the information provided without consulting an attorney who is licensed to provide legal advice. Topics and ideas shared on this show are not to be used as a substitute for legal advice from a licensed attorney in your state.
Welcome to Under Oath with Michelle Bell. I'm your host, Michelle Bell. Now, this is a show where I bring on fellow attorneys and we give you, the audience, legal information without that consultation fee. Now, I like to start off the show with a segment I call Jury Duty. And this is where I give a trivia question, and the first person to submit the correct answer will receive a gift, and their name will be posted on the website. Okay, are you ready for the question? Here we go. Which crime-fighting cartoon dog has the initials SD on his collar? All right, submit your answers to the website, which is www.mbunderoath.com. All right, and stay tuned. We're going to have a guest, and they're going to be talking about tax. We'll see you then.
They'll test you. Try to break your will. But however loud the loudness gets, however many cheese puffs may fly, you're the driver, the one in control. Stand firm. Just wait. And move only when you hear the click that says they're buckled in for the drive. Never give up till they buckle up.
Welcome back to Under Oath with Michelle Bell. I'm your host, Michelle Bell. Now, I'm here with Miss Stacey Ann Bradbury. She came back, guys. Yay. So she is from Bradbury Law Practice, LLC. Yes, ma'am. You do immigration, tax, estate wills and trust, and I'm missing one. Family law, right. Yes, ma'am. So yes, Ms. Bradbury is back, and we're going to discuss tax today.
Yes, we are.
Tax time is coming. This is like right on time to be discussing tax.
Yes, ma'am.
All right, so let us have it. What is going on? Because I know there's like all kinds of tax new laws going on, deductions and increase in payments and paychecks. Like, what? Help me. What's going on?
Okay, well.
I mean, I just need to know. Am I going to be in the same category as Warren Buffett?
Yeah.
Or am I going to stay, just Michelle Bell?
You're just going to be Michelle Bell. Sorry.
Okay.
You have to obviously make well over a lot of money to be able to be in to really benefit from the tax cuts that the president put forward and the Republican Party. But anyway, okay. What we want to do what we want to talk about with taxes is the benefits.
Right.
Okay. But let's kind of understand, this is the season to be jolly because people are looking for refunds. Okay.
Right.
So in discussing the refunds and the filing, I will talk about what we have for this year, what's for next year, what not to do, what you should do, those kinds of things.
Okay, cool.
All right. One of the things that happens a lot when we're filing taxes and where people look to get their most benefit from is their deductions.
Okay, right.
Okay? And there have been some changes to deductions.
Okay.
But let's start with something that I think that is very important. Medical deductions.
Yes,
Okay?
need to know.
Need to know. You are allowed to deduct medical expenses.
Okay.
That's the general rule. Okay?
Nice.
You're allowed to deduct medical expenses. Now, of course, there are certain expenses that that they're going to look into, but for the most part, your prescriptions, your vision, your dental, if you're paying after tax any premiums for health care, those are deductible. Okay? Now, is it worth deducting medical expenses is really the question. Because yes, I can pull up something, I spent $1,000 this year on dental. I spent $500 on this. I can deduct. what's your annual gross income? What's your adjusted gross income for that year? If your adjusted gross income, if your medical expenses is 10% of your adjusted gross income, then you'll be able to deduct. So guess what's going on? If your paycheck is pay for the year is $25,000, your medical expenses have to be at least $2,500 or up to get credit.
Okay.
But if you're making $75,000, your medical expenses have to now be $7,500 and up to get credit. And God forbid you make $125,000 a year, your medical expenses now have to be at least $12,000 and up.
Right.
So now we are looking at who is getting the best benefit for medical.
Okay.
If you're making a lot of money, you're not going to really see that, okay? But if you have sickly people in your family, then maybe. If you have dependents, then maybe. So understand, you can deduct, but the higher you are in your income makes it harder for you to deduct because you have to match it by 10%.
Okay.
The only people who don't have that rule are people who are 65 and older. You're about 6 or 7%. They look at 6 or 7%
Right.
of your adjusted gross income versus 10%.
Okay.
So that's a little break. There's no change in that from the old tax law to new tax law. The good thing is that you still are able to deduct.
Okay.
Okay, so that's good. You have sales tax, and sales tax is something that you can deduct. Okay. Yeah.
Really?
Yeah.
Okay.
So you do a lot of shopping, right? And you keep your receipts.
Right.
Well, there's your sales tax you can deduct. Now, keep in mind, this is just like what they say, standard deductions versus itemized deductions.
Right.
When you're doing your taxes, the government already considers, based on your household number,
Right.
how much money you would have spent in sales tax for the year.
Right.
If you can show and prove that you spent more than that number, then you can deduct. You
Okay.
can deduct that. If you just bought a car, the sales tax typically for a car is pretty huge. So they allow you to put that in. That's in addition to what they already put in. So you got a car, put in your sales tax for that car and other stuff if you have them, you're deducting your sales tax.
Nice.
Okay, so that's also very good. There has been some changes with regards to whether you get to deduct state taxes. Okay, because now we have people who have their federal taxes and the state claims or charges federal taxes. I mean state taxes.
Right.
So, for example, in the state of Maryland, state of New York, state of Massachusetts, where state taxes are a requirement to file, you normally get a benefit for what it is that you file and in your federal taxes. That is something they've cut out. Okay. Now that is actually being litigated in the courts, the states are getting together, the different attorney generals from the various states, because they find that this is discriminatory against democratic states. That's how they're arguing it, because there's a higher bracket of taxes in these states, and now you're hurting those states because now they can't file. And typically, it is Democratic states that have state taxes. Like Florida, for example, has no state tax, so it doesn't affect them in any way. Right?
Okay.
States that don't have state taxes will not suffer under this, and therefore they don't care about the deduction.
Right.
But states that do, Maryland, New York, New Jersey, they have state taxes. They are no longer able to deduct. That's a problem. Okay. So that's something different this year versus last year.
Okay.
Okay, but now that they're putting together, the attorney generals from the various states are coming together now to fight this, we shall see if this is something that's going to stay. Okay, because they're deeming it discriminatory.
Have to keep track of that one.
Yes, please do, please do. It's
Yes.
very important. Another deduction that we have is job deductions. Now, this is where things can get a little tricky. Okay.
I can figure that.
Yeah, things get tricky here because it can be abused. And that's what we really don't want to do, because I also do audit representation, which is another part we'll talk about later. But just doing that, I see and know what they're looking at and how you can best protect yourself and play it the right way and get the best of your money, get the best out of it.
Okay.
You know? So one of the biggest things that I know happening on that is people work from home. Lots of people work from home.
Right.
That's a big tax deduction.
Is it?
It absolutely is. Because your home, you can use that and start taking off some numbers. If you have a mortgage, you can use that percentage of the house that you use for your home office. And there is a rule about that. I don't want us to get overly excited.
Right.
But we have to have a home office.
Right.
If you are using your bedroom for a home office, that's not deductible.
Right, because you're not only using it just
Right.
for the business purposes, hopefully. You're using it for other purposes as well.
Right. It has to
Hopefully.
be exclusively to
Right.
that business. So just remember that. If you're not using it exclusively for your business, then it's not deductible. That office.
Right.
Okay. But you are working from home, you can deduct your internet, you can deduct use of your computer, you can deduct use of utilities.
Right.
You can deduct. So there are things that you can use. And that's a benefit. That hasn't changed.
Okay,
Okay. So you just want to know that you have that opportunity.
Okay.
Mileage, you can continue on your car.
For business purposes.
For business purposes. Now, if you work for an office or you work for a company that is not reimbursing you for your use of car, you can use your car and deduct the mileage, but make sure it's not just going to work. You're not
Right.
getting deductions for going to work, people. You're going to work, you have to go to work. The deductions come in when you're making pit stops for work.
Right.
Okay, so remember that pit stops is what when your mileage matters.
Right.
Okay, and there are some exceptions, and if you go to a knowledgeable tax preparer or you use a good software, then maybe that will help you along when you're preparing the taxes. But deductions aren't just as easy as one thinks it is. You have to be considerate in making your deductions.
So basically, if you're using a software, you just got to read the fine print. Don't just read, the topic and deduction and put that in. But usually, like say for example, if you're using like say TurboTax or something like that, there's usually like a little icon, and you click on it, and it gives you like the whole description of what falls within
right.
it. Yeah, actually read that.
Read that. Exactly.
Read that.
Exactly.
Because that deduction may not be something you're supposed to be taking. Because what you don't want to do is get an audit from IRS. That's not what you want.
No.
So this is great. We're gonna take a break.
Okay.
And when we come back, you're gonna continue to go on about tax. Last year versus this year, the new tax law, how it applies.
Yes, we got some good ones coming up.
And how you're gonna get me to be
Like Warren Buffett.
same category.
Okay, you got to work on that.
Same level.
Okay.
All right, we'll be right back.
We just finished dinner and it was time for homework. He hates homework.
It makes no sense.
I don't know how he finds anything in his
I
backpack.
can't find my backpack.
I couldn't even read his handwriting.
Holding the pencil makes my hand hurt.
I know he's bright.
Why is it so hard for me?
He's
I'm
just
trying
gotta
as
try a
hard
little
as
harder.
I can.
When you can see learning and attention issues from their side, you can be on their side. Go to understood.org, a free online resource with support and tools to help your child thrive.
Welcome back to Under Oath with Michelle Bell. I'm your host, Michelle Bell. I'm still here with our guest, Miss Stacey Bradbury, and she's talking about tax, giving out great information. So now we're going to go into our next segment, which is office hours. And we do have a couple of videos of people asking tax questions.
Okay.
And just answer it the best that you can, okay?
Okay.
We're going to go to the first video.
I'm retired. Can you tell me how the new tax law will affect my pension or my Social Security?
Well, that sounds like a good question to me.
All right. Well, I think it is. Especially as senior citizens, I think that they have to concern themselves what's going on with Social Security, what's going on with their pension. And I can say that as it stands, nothing. Nothing is going on. They are fine. Their pension typically is being taxed, so that stayed the same. So nothing changed there.
Okay.
Social Security is not taxed,
Right.
so nothing changes there, and it won't be taxed.
Right.
The only thing that I would quickly advise is, or make one aware, is that if you are making a lot of money in your pension, if your annual in your pension is pretty large, and you bringing in also a Social Security amount, the government will tax a portion of your Social Security in light of the fact that you're already bringing in some income. Okay.
Okay.
So there is, but that happened before the new tax law.
Okay.
So I just want people to be aware that that can happen if you have a pension and Social Security, depending on how much money is coming in, that your Social Security can get taxed. So one way to help relieve that burden is, unfortunately, actually having voluntarily having taxes withheld from your social, because then you can get that back when you file your taxes, along with whatever you may get from your pension.
Oh, well, sounds good to me.
Okay, yeah.
That's nice to know for when I get to that stage.
Yeah,
That's awesome.
that's right, no problem.
All right, I believe we have one more
Okay.
video.
Okay.
You ready?
Yeah, ready, let's go.
One more question. Will I be able to deduct my interest from my mortgage under the new tax law?
It's distracting. Okay. So that was another great question.
Yeah, it was. And he had one more question. And again, being a senior citizen, I'm sure you're worried about, okay, look, normally it was on the table. Let me just put this out there. It was on the table to get rid of mortgage interest deductions.
No.
Oh, yes. And that was very scary for a moment. But I can tell you, rest assured, they did not take it away.
Yay.
So you are able to deduct your mortgage interest. Now, there is some cap that is involved. If your mortgage is about $500,000, there's a cap on how much of that you can take. So that's over time. So you can deduct. Just remember that. You can deduct. What they have stopped, however, is mortgage insurance premiums. So if you're paying, typically those are people who have FHA loans. If you're paying mortgage insurance premiums, that is now off the table. Unfortunate, but it is off the table.
So you don't get a deduction for your PMI.
Right.
Ooh. Sorry.
Yeah.
Sorry, guys
Yeah.
who have the PMI.
Yeah, but this gentleman who is concerned, and again, as a senior citizen, it is to be concerned. It is concerning. There is no touch on your mortgage interest
Insurance.
deduction, right? No, interest.
Interest, I'm sorry.
Yeah, insurance, there is. You cannot claim it.
On,
Mortgage insurance premiums.
the PMIs, right. Okay, well, good. I think that's all the questions that we had.
Okay.
So
Okay.
thank you for answering those.
No problem.
Okay, now we get to the nitty gritty, back to the deductions, because I like to hear this. 'Cause,
Yes,
you know,
yes.
I gotta do some deductions.
Yes, always, always.
All right, so we already talked about the sales tax and all the other good stuff, the home office. Yeah, okay, now, what's next?
What's next is, I just thought about this. This is something simple. Depending on your profession and your job, they allow you to deduct things like subscriptions, and if you pay dues, you can deduct your dues. Whatever magazines that you are that you pay in order to know your job and be informed about your job, you can deduct those. I mean, they're pretty flexible on job deductions. Okay, so it has to be for the purpose of your job. Your employer is not reimbursing you for it, or if you're on your own and you're paying for it, then fine. But make sure it's connected as an ordinary and necessary expense for your business.
Okay, so for us attorneys, and we're members of the ABA, which is the American Bar Association for attorneys, that ABA journal,
Yes,
so I can write off that
you
subscription.
can write that off. Yes, ma'am.
Nice.
Now, one of the best deductions that we all get if you're in this group is children deductions. If you have a child and they're your dependent, you can get something back, okay? But there's some limits, of course, because age matters, all right? Now, as far as the new tax law is concerned, right now it's $1,000. It's been $1,000. So your child, you get deducted for a child at under the age of 16, $1,000 per child, okay? Now, it has been part of the new tax law is it's going to go up to $2,000, which is phenomenal. So that's for 2018. It's not there yet. So be prepared to get that increase for your children next year. But also you have earned income credit. That's another way you can get some deductions for your children. But again, the age matters. The only time you get a little wiggle room on age is if the child is actually in school. And so if they're in school, you get some credit because they're still your dependent. Okay.
And when you say in school, do you mean like grade school, high school, college, what?
Well, it does matter. So if college is what I was referring to. Okay. So if you're in college, you have a student living in your household, they are a dependent, you can get credit for that on your taxes. But if they are minor children who are under the age of 12, you get credit. Obviously, you're going to get child credit. You're going to get a whole lot of credit, but you also can do the child care credit, where, of course, in order for you to work, your child needs to be taken care of by someone or some entity while you work, and you get credit for that. Okay. Now, of course, there's income limits as well, but that's a good way for you to get some deductions. Your children definitely can bring something home.
Look, they need to.
Yes.
It's expensive taking care of children.
Now, I'm sorry. Were you going to ask me something?
No. I wanted to know, like, what else? What other deductions?
Well, one thing that I find important is there's some people who are not really interested in getting a refund at the end of the year. They're not. It doesn't. They want to see that money now.
Like throughout the year versus that one lump sum.
Exactly.
Okay.
Exactly.
Yes.
Right? Some people like that.
Yeah, I'm one.
Okay.
I like to see it throughout the year, not that one lump sum.
Right.
My husband loves the big lump sum.
Right. And there's nothing wrong with that.
No, nothing.
It's whatever floats your boat.
Right.
I want to say this. It can be done. You have to strategize about it. But at the end of the day, you should think about how many exemptions you want to claim for the year. You have to file what they call a W-4. And in that W-4, you get to say 1 exemption, 0 exemptions, 2, 3, 4, 5, whatever number you choose to pick. Now, it is unreasonable to pick a high number like 9 and only have 2 people who live in your house. Okay? Because they're going to pull out a whole lot of money. They're going to give you a whole lot of money.
Right.
But when it's tax time, you are guaranteed to pay back because you only have 2 people in your household. So make sure it's equivalent to the members in your household, the exemptions you're going to have.
Right.
So don't do 9 unless you have 9. Stay within your limits so that you can get your money, and then when you file your taxes at the end of the year, or after the end of the year, then you can get your money back, or you don't owe. You break even, and that's very important. Filing 0 allows you to get the most money back. But again, if you want the money throughout the year, file within your household number. Your exemption should equal your household number. You can play around with it a little bit. And I always say, hey, do that until the end of the year, until about October or September. Then you change it back to 0 or 1. You can even out. But this is just a way for you to have money throughout the year and not pay back.
Not have to owe. Right.
When it's time to file your taxes.
Well, no, that's a good tip. Some people may not know to do that, or that you can do that.
Yes.
So that is a good tip. Okay. So we know that there's all new tax laws that have been implemented. People don't know if it's gonna, affect them this year, next year, or anything like that. But so now people are seeing in their paychecks a little additional money. It could be anywhere, maybe, I don't know, $30, $50, $80, $100, additional. Okay. That's exciting.
Yes.
And that's a benefit for some. Is there also a consequence or a downfall to that?
Again, it depends on who we are, who is benefiting, right? Let's look at it. Let me see if I have 3 groups of people. If we're getting a return of $30 a paycheck, and you get paid every other week.
Right.
All right. We do the math. 30 times 26 is 78,
Something like that.
and add a zero.
Right.
So you're looking at about $780 for the year.
Right.
Okay. So what happens? This is considered income to you. This money is income because you're getting more money back. Something was reduced in
Right.
order for you to get more money in your check.
Okay.
So when it's time to file taxes, you're going to be including that extra money as income. You're filing taxes on that $780.
So it could possibly put you in a higher tax bracket, which means that you're paying higher taxes.
Right, exactly.
It could.
Depending on where you
Right.
fall. Now, I don't think $780 is enough to put you into a tax
Well,
bracket.
if you're right under the bubble, like where you are, because if you're filing joint with, with your
Yes.
spouse or stuff like that, yeah.
Exactly.
It could possibly. So you don't know. So, okay. But I understand everything that happens, there is a consequence to it.
Right. So we just want to be aware
Right.
that this is something that is possible. You look at this money as income. It is income. It's not free. It's your money, but it's income, and you're going to get taxed on it because all earned money, all earned income is taxable income. So that's it. Period. You're getting taxed on it.
Okay.
They're not going to allow you to write it off.
Well, no, that's good to know because people don't know what's going on, especially with the new tax coming in, and now you're getting a little bit of extra money in your paycheck.
Right.
So that's a great thing, for others. But just to know, like, hey, this is not just free money. I get it, and just put it away in the pocket. Go spend it and be great.
Right.
But it may cause a consequence to you when you file your taxes.
Right. That's
so that's wonderful news.
Yes.
That's great to know.
Right.
And to clarify for everyone. So what we're going to do is we're going to take a break.
Okay.
And when we come back, we're going to do my favorite segment. You remember?
Yes.
Jury duty?
Yes.
Yes.
Let's put
Okay.
jury duty. Yes.
Is it jury duty?
Plead the fifth.
No, plead the fifth. Okay,
Yes.
you're right. You're
Okay.
right. You're right. So, look, I'm human. I make mistakes too.
That's all right.
So it's plead the fifth.
Okay.
Ready?
Yes.
Okay. We'll be right back. Got a quarter? Welcome back to Under Oath with Michelle Bell. I'm your host, Michelle Bell. I'm still here with Miss Stacey Bradbury, and we're going to go right into plead the fifth.
Yes.
You ready?
Yes, I am.
All right. Private school or public school, which do you prefer?
Private.
City life or suburbs?
City.
Tennis or lacrosse?
Tennis all the way, baby.
All right. Now, have you ever flirted to get out of a speeding ticket?
No.
All right. And for date night, dinner and a movie or club and after party?
Dinner and a movie.
Okay. Well, you did answer the questions this time, so that's
Yes,
great.
Yes.
All right. Now that works. So thank you for playing Plead the Fifth. We're going to go right into cheat sheet.
Okay.
And you have 3 tips for the audience that they need to know for tax.
Okay.
Listen up.
Listen up. Do not embellish your exemptions. Tip number 1. Tip number 2, make sure you file your taxes every year, even if you owe. You'll get penalized only with the interest, okay? And also, last but not least, but very important, seek valuable advice from a certified CPA, a tax attorney, particularly when you are in a situation which you owe lots of money. They are the best people in the field who will be able to help you.
Okay, well, those are great tips. That's awesome. Tell the audience again how you can be reached if they have more questions.
Yes, I can be reached at Stacey at BradburyLawPractice.com, or you can reach me on my Facebook page, Bradbury Law Practice LLC.
Nice. Social media, love it. Well, thank you for tuning in. Thank you for coming on the show.
Yes, thank you for having me.
Oh, awesome. Anytime. Come back, even if you want to talk about one of your other practice areas.
Okay, wonderful.
So definitely subscribe. The website is www.mbunderoath.com. You can subscribe there. You'll get notifications of when we have shows coming in. You can watch the old shows or shows that have already aired. You can submit your questions for jury duty, office hours, plead the fifth. It's just a great resource to have. We are on social media. Please check us out on the different social media channels. We are YouTube, Twitter, Facebook, you name it. Look us up, Under Oath with Michelle Bell, and subscribe. You'll get the notifications. I promise it's not a whole lot. We don't ding every day, but you'll get legal tips and notifications of the shows. So till next time, we'll see you then.
Yes.